Um, so Euro Aussie, I like some of what's some of the story that's playing out on this. Um, so this is the daily chart, and we appear to be wanting to come lower. Sort of tested this potential dynamic support. Um, got this fake out scenario dragging high time frame traders into the move, short squeeze right up to the highs. We've actually penetrated those highs. You'll see that better on a lower time frame, but we've got closes above there. But we've had a subsequent move lower. So the question is whether we're coming up, so coming down to come up, or whether this was a firm break of, so the head and shoulders here, we move right back up into that. So are we breaking lower? Are we breaking lower, or are we coming higher? I'm going to stick with the prospects of moving higher. I think we've come. If we were to get, if we were going to head lower based on these breaks of structure and so on, I'm not sure we would have had that strong impulse, and I would have rather have seen a deceleration in that impulse. I would have liked to have seen this scenario here. So if we draw this back to say when we came up into the what would have been a regarded as a potential resistance up in here, or all of that, let's say. Got that neckline as well in here that has been taken out. So that was there in there. 63.50 was broken. What I would have liked to have seen in a scenario um, for the downside would have been this sort of scenario. So get rid of this. Up into resistance, and then potentially up to here, coming down and resisted, and so on. But what we've seen instead is a very strong move up. Play that out. So that's very firm. That to me tells me that institutions are behind the move. Now we're out of balance and we're going to be coming down. Well, we are coming down. So let's draw the Fibonacci on this. I like the Fibonacci as a reference point. That's a very overextended move. Um, W formation. So I'm not sure that this has the I'm not sure that this has the potential to come in as low as the neckline at the origin of the move, but you're going to have probably some traction in that area. So a 162 target is reasonable for the move lower, potentially to continue higher. So I think the way I would approach that is if you were looking to sell, which you said that you are, and you're asking short would take profit 62.41. 62.41. 62.41. Okay. 62.41 would take us down to 62.41. Yeah. Okay, sure, why not? That's right on the money, really. 60, sorry, 62.40. Thereabouts, okay, so in there. Well, yeah, so that's in line with what I was looking at. Um, sure, why not? You know, if it all marries up with your trade plan rules, strategy, and if that's your target, that's a reasonable target because you've got the potential congestion in here on that candle. You've got the trend line support as a confluence. Um, and then you've got a runner if you want. You could leave it. Well, I mean, this is not advice. This is how you manage your trades. It's up to you, but you could leave a runner to target the 62 figure. It's a 50% mean reversion of all of that move. Um, on the hourly time frame, hold on. Let's go back to the future, back to the old school, back to the. Yeah, let's go in here. Let's see what that looks like on the hourly chart. Sorry, make this nice and clean. So we've got our trend line support. So here, I'm just trying to marry up as much as I can of that trend. So it would appear that we're moving to the backside of it, which is nice. And we have broken these structural points here, which is also nice. We're coming into a potential support area guarding below here and lower. So we've got this box that we need to overcome to the downside. Let's draw those solid lines for now because that hasn't been broken yet. Okay, so in order to break this, we might need to come up. We've got this overextended M formation, but that is nevertheless a, well, in fact, I draw it. That would be my point of interest to be selling from within. So you've got that nice engulfment of that pin. Well, break of structure, pin, engulfment. So selling from anywhere within here. You stop above. You could be really conservative and have it above there, or you can bring it right in. This is on the hourly chart, mind you. You can refine it on the lower time frames. And you're going for the 50% reversion. what does this look like on a 15-minute chart? So what we're going to now look for is a break of this trend line, which is containing the correction currently, a lower time frame, maybe as low as the 5-minute, but let's stick with the 15-minute for the time being. So we're looking for that to break, and you'll be looking for your structure to come high, to come down. Now within this area, we've got that candle there, which could be a point of interest. So if you wanted to refine that, you could. Stop above those highs, maybe. Conservative about it. So, in doing this, the more that you refine this, the more at risk you are of missing the correction and the market melting without you. So just keep that in mind. But this is just really for a hypothetical viewpoint of how this could be refined for a sell-off. But you need to. What I'd be doing in this respect is I'd be looking to see how much momentum there is in the break of that structure. If these candles are looking strong, fading, and strong again, then the likelihood is that yes, the market's coming up into this here. But if you're getting a sort of a very trickle, sort of trickling out, and the sellers are really, you've got engulfing selling uh, bearish candles, then you're likely to think, well, this is just going to peter out, and you want your entry lower down. So I hope that helps get some value out of that. But yeah, nice. I'd agree with you on that. Looks reasonable for a play to the downside. Good luck.